Just now. Samir, good morning. Thank you for joining us. Samir, when we know that the shape of the world and the economy is not going to improve in a hurry, it could be 3 to 6 months, it could be 6 to 9 months, some are saying 12 to 18 months. Are you a bit surprised with the rally both global markets and US Indian markets have exhibited? Nifty is sitting at 9,000 plus and US markets are less than 20% away from their all-time high. Are you surprised and both delighted with the strength what equity markets have exhibited?
Well, that is the whole tussle in equity markets, that do you want to give up some upside or do you want to protect downside? And it's an ongoing tussle all along. So in between, I also get carried away that there is progress, that there is money being thrown at the problem. And then sometimes they talk about good medicine being found and stuff like that. But if I look at India versus US, I think India is really behind in terms of the impact, negative impact that will have, and the response of our government is too slow. And also in some things, we have actively assisted in blowing up parts of our corporate sector.
So, according to you, are we looking at serious unraveling of bad news? For example, think about what Franklin is doing. They are shutting down their 6 schemes because the instruments or the corporate debt which they bought suddenly has become illiquid. Is this an harbinger of more problem to come? That credit will start slowing down. It will start hitting a freeze limit in some MSCs, and then that's the time problem is going to hit the ceiling.
Problem here is that some of these problems look easily solvable, at least relative to how the world is solved. So, for example, if we deliberately don't act on it, as in the RBI, and says, no, this can only be done by banks and I can only give them cheaper money, but they have to do it and stuff like that, whereas they themselves have done it in 2008 through SPV, or the world central banks are doing it. So the problem is actually right now I'm a little bit bullish. Relatively speaking, it means my net is still in the 50s. But the reason I'm bullish is I think some of these things are in our own hands. The problem is that we as a country have lost too much in relying on this thing that the system will save it. And the system doesn't do it for, I don't know what reason. Is there a philosophical issue that a corporate sector or a company is owned by rich people and therefore they have to do everything on their own? Because this is the whole game, that at this time, even this problem of this failed NBFC LTRO whatever auction, or the some of it is solvable. So right now we still hope a little bit that things will work out. Of course, there is a bigger issue. The bigger issue might be that when will the medicine be found, or a vaccine will take so long. But some of these things look self-created, and we keep hoping, and even now I'm hoping that some of these things can be solved. So I'm not bullish in any way, but I'm not that bearish anymore, because passage of time has also, makes us inured to these kind of negative issues. Now that after the New York has peaked, nobody's really tracking beyond the point that what is happening in Texas and other places. And so, equity markets and equity fund managers are by general forward looking and keep hoping. So I'm in my 50s net, and I have a few financials in my long. So I thought I'm okay, but every day is disappointing in the way we are dealing with it, I think.
Samir, when you say you're 50 long, I'm assuming you're 50 short. Where do you think markets have run up ahead of themselves, and underlying security prices or those businesses or companies, they need to come down when bad news will start unfolding?
I'm not 50. I'm net 50. So which means my longs will be 90% and the shorts will be around 40%. So where I think the market is ahead in terms of, is actually not so much that they will correct, but that we have given too much this thing that, these consumer companies are like safe havens for life. They are not. I have never in my life would have imagined that fund manager would come on TV and instead of saying, okay, I have bought these high valuation companies because they outperform currently, actually come and say valuations don't matter. I mean, this kind of mind-blowing, this time is different kind of thing, which we see in writing every week from fund managers and on TV is beyond anybody's imagination. Because I don't think in 200 years somebody would have thought like that. But the point is, so I think that some of these stocks may underperform when a recovery comes. The others you are playing on that are they guaranteed survivors or not? So we've actually bought two very beaten up names, as in names that are down around 50% in the last 2 months, on the basis that, okay, now maybe further bad news or the same bad news for 3 months, 6 months won't impact them so much. But if I were to close my eyes and say that I will actually not open my eyes for 3 years, I would buy Indian private sector banks and I would buy all the things that have done relatively badly rather than buying the stocks which we also have from some of them, because this quarter will be better and that quarter will be better, because I think it's nearly guaranteed that over 2-3 years they will massively underperform. But the question is in going from A to B, as you've seen, in a fund business or even personally, it is very easy to say, oh, I will not look at the market the whole day, even though I'm sitting at home, and I will read books and I will look at my portfolio after 3 years, therefore buy it with a 3-year view. The reality is that to be able to hold on to those positions for the in-between ups and downs, you need to have a balance of some of these things, which may in the end lower your returns. But they are still better than you not being able to hold on to anything because one day you get too frustrated or your investor, in our case, gets frustrated. So it's a balance. But if you say really close your eyes and open after 3 years and don't look in between, the stocks would be quite or a little bit or maybe 20% different from what we and others have.
I saw on Twitter that you are sharing magic tricks. Do you think now everybody requires magic only for markets to go higher from here?
Well, the thing is, one magic is needed, which is the cure, which is not a magic because, ultimately it's a flu and we hope that so much research has been done on the flu and it's one variant of a flu might be more deadly or whatever. But that magic, I was thinking yesterday before this new news on Gilead that how much those scientists would be under pressure that they find a cure and they can change the world and save the world or whatever is the word. So in one sense, what a great thing for them if they can do it. They means any of them. So it is magic in some sense, things which we ignore, but now you realize how we are all living with some people doing extraordinary work and some of us just doing day-to-day work.
A lot of market men have bought pharma, and they bought pharma because they feel that pharma's right moment has arrived. Pharma will have a natural tailwind. US FDA will be slightly more stringent, and somehow they believe that Indian pharma companies will only grow and glow from here, irrespective of whether they are making hydroxychloroquine or they are making something else. Do you think it's a rising tide phenomenon in pharma, and one needs to be careful there?
I don't believe that anything will change in Indian pharma other than maybe some US. In one sense, you can say the FDA being a little bit more less stringent or letting some of these things not be punished to the extreme for the moment. But on the other hand, you could say that the US will insist that some of the critical medicines be all made in US. But we have also bought 2 pharma stocks because our formula is very simple. We own 30 odd stocks. If we buy 5% of something different, so for example, suppose today you were to announce effectively that from now on mid caps are doing well. If I buy 5-7%, I feel I'm in the game. I want to neutralize that factor and move on in my life. I don't want every day to be told that, we are doing badly because pharma is doing well, or in general that pharma is doing well and it was so easy, because it is my strong belief that the number of companies that are good in any market are more than what we own. That's why I get very upset with the arrogance of some fund managers that there are only 15 companies in India worth owning. No, There are 50 companies in India worth owning. We chose not to own them because of that time, the situation in our view being different. So we chose 30. But it is not my case ever that the only good companies in India are the ones which I own, and there are so few of them anyway. So you can, based on the environment, which can be both fundamental and also a market preference. It is obvious today that even though, for example, we own Nestle, now this might be very expensive, but we are also not selling it off today. What is the rush? We will not buy maybe, but we will keep it till all these guys feel that it is worth, it's outperforming. When for 3 months it doesn't outperform and we feel that the market has broadened and there is a little bit more willingness to buy something more economically sensitive or whatever, you sell it off. What is the big deal? So in that context, I have bought because it was always there in our acceptable stocks to own, but we had chosen not to buy them, to buy something else. So the main thing I say is there are a number of companies doing well at any point of time, and they are mostly bigger than what you own. It is not that whatever you own is only the things worth owning. You means anybody. And so from that very simple context, we buy 5% pharma now. We are okay, we are covered, don't tell us. We don't overly believe the word, but these were good companies and maybe it's their turn, who knows? It's not that the companies were bad or doing so badly in every case. It was that the context was people wanted to buy something else, including us. So you can handle it for 15, 30 days. You say, screw it, buy 2 companies from this side and move on in life.
The whole theory of greed and fear, Samir, do you think one should apply this theory of greed and fear right now? Everyone has come on the channel and said, start buying in deferred manner. You will make a lot of money if you have patience for 2-3 years. It's a simple but a powerful thought. Do you think there is merit in following this simple thought right now?
Well, in some sense, we are also doing it by saying that we have bought 2 stocks which are down 50%. In some sense, we are trying to be greedy that once things become normalized, maybe we'll make some of it. It means the market will give some of it back and therefore we'll make 50%. But my point always is that most of the guys that we are talking to through your channel as our investors, as general public, they are already in the market enough. It is not that they have to now sell their house to buy to show a high level of greed or that they must take money and borrow and do it. So in any case, you will not be able to exhibit extreme greed today because nobody will say that, okay, lever personally and buy. So what are they saying? They are saying, increase your SIP a little bit, or if you have some little bit cash, put it in. But as a percentage of your net worth, it's not going to change anything. Therefore, our game is whatever keeps you happy and whatever keeps you in the market is enough. It would be enough achievement to not have sold at this time, to not have liquidated at this time, not have been forced to sell out at this time. You want to do a little because either you are rich and therefore it doesn't matter, or because you did not invest before, it's okay. But none of that is going to meaningfully change your life in just that extra investment which you make. So there's also a difference between existing investments and new investments. We are all trying to be cute with our new investments. The existing investments, we are not really selling, we are juggling them around. Maybe increasing the shorts a little bit, but those are anyway, can be covered in a 30-second notice. Broadly, you have to pass this time without getting blown up, and that itself would be a big achievement.
Samir, I started interacting with you for the first time in 2000, and post that we saw TMT meltdown. After that, you've dealt with the 9/11 crisis and the famous crisis of GFC in 2008. Every time when markets correct, the leadership in the market A changes, and B takes about 2 to 3 years for markets to retain the original highs. Is this time different, or do you think the same pattern would be repeated, which is banks will not take the leadership mantle now, and for those who are saying that a high is coming in a V-shaped recovery, they will they should not expect it, because normally a bull market, normally it takes 3 years for a market to retain, it takes 3 years for market to retain the previous highs.
First of all, if you see in all these, it is not that while the bear market was going on, let's say in 2000, 2001 or 2008, that somebody already anointed that now we are actively looking for a new group to lead. It happened naturally. So if the group has to change, maybe you'll find in 1 year. Now here what is the issue is that on one day in the middle of the correction, somebody comes up and says from now on it is pharma, and bang, 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 everything in pharma from somebody making kunin, which you know and I know is not going to work, everybody knows, is basically announced, and therefore that's it. So I think that rushing to judgment is not the case. Secondly, you have been saying from 2000, but you can look at it from a third bull bear market, which was one season before that, starting from say 93, 94. In all the three, the private sector banks at the top have actually outperformed. So I say that if today these private sector banks were your top 2-3 positions for nearly everybody, do you think that they will not be 13th, 15th position for anybody? I mean, will they be considered so bad that you will find 20 or 25 new names? In our case, 30 new names, but not have these. Maybe their position will come down, but in any diversified portfolio of 15, 20 names, you will have them. Now you can say my weightage will be different. Well, the weightage has already become different because they are down, say, 35, 40%. So if generally a guys or the index or whatever had 8%, now in theory they are worth 5% because the rest of the market is also correcting. So I don't think you will leave them out. In any case, they have outperformed in all the three bull runs that I have seen, which is 95 to 99, 2001 to 2007, and 2008 and to 2019. In all the three, all these 3-4 stocks outperformed. Plus, some of this correction in financials, because people are saying we'll move from financials to something else, had already happened. The NBFC correction had already happened because of ILFS and then these. And in the banks also, you've already cleaned out from, say, a starting of 8 banks to now 3-4 banks. I don't think that these 3-4 banks we can say today are going to zero because a new bull run has started or is starting, and somebody has announced that it is being led by pharma or something like that. It's okay. It's one of the, we also own, but we are not saying that pharma is going to lead it or something from now, but it's okay. It should be having it a little bit. A, you will not know, but B, it is not that straightforward and it cannot be announced like this. It will emerge and then we'll see. Maybe it is.
Okay. Samir, for those who are of the view that it is time to migrate only to consumer stocks, buy in HUL, buy in Britannia, because you know that those companies are still functioning. We are still consuming daily essentials. That's one space where we know valuations are expensive, but at least you are reasonably confident of not negative growth, but a growth. What is your view on consumers now?
No, who cares that if you create that as your scenario, that the only things you are confident of are that you will be able to buy things while sitting at home and the rest of the country would be locked down. What is your otherwise the scenario? What is your scenario for India after 1 year? That how many people will have jobs? How many companies will be working? How many hotels will be open? How many people will be traveling? You cannot have a scenario that, no, we will all survive, that we will have our jobs. But actually, from a company point of view, only these consumer companies will be performing, or that So I don't agree with that. Look at it differently. The people who buy, by the way, we have many of them. As I said, Nestle is one of them. We have at least 4-5 of them. The only difference is we consider them part of a portfolio. We will not defend them on the way down, saying, oh my God, because I came on TV and I wrote essays every week that there are only 10 good companies in India. Therefore, now I am publicly, I can't be seen as not buying them or owning them for the rest of my life. Because exactly 3 years ago, there was another group of companies that were recommended by another group of fund managers saying, buy these companies and sit on them for the rest of your life. And those companies were at that time chosen to be the best companies of India. And they included Hero, Honda, and Eicher Motor, and Indigo, and Page Industries, and whatever, RBL Bank or something. The logic was the same. Buy these companies and sit on them. Don't do anything. Now another group comes and says, buy these companies and sit on them. The point is, nowhere in the world do you have 25 companies or 20 companies doing well for 20 years. You tell me the last 20 years, same company doing well. Maybe there'll be a handful. But to rely on what happened in the past. So, for example, to say today, these companies are good because in 2008, they did not fall. You have chosen them on that basis. You have chosen those companies which didn't fall in 2008. So now you can't use the logic that these companies are great because they didn't fall. The logic would work if in 2005 or 2004 you came up with this model and then concluded that I'll buy it. So my thinking is they are all part of a portfolio, but you have to first have some consistent macro assumptions as to what are you thinking. So we are thinking that we don't know in 3 6 months. We hope and pray that these things happen, finish early. But let us say they end after 12 months. If you are sure of companies that are guaranteed survivors, that means they don't have enough debt or very little debt. Secondly, their relative position in that industry will not change because of this. Because mostly, actually, it'll improve because some other guys in the sector would be having problems, or smaller companies or PE funded companies. Thirdly, whatever we can get in terms of our understanding that this business will not be overly disrupted because of these changes of habits and whatever you are going through right now, then we are willing to buy some of them even though they'll have no earnings for 6 months. Actually, the advantage of buying companies that have really no earnings for 6 months is you don't have to analyze them for 6 months, which means you can't say, oh, it disappointed. Sorry, nobody's looking at the earnings of these companies for 6 months. Tell me after 6 months, will the sector survive, the company survive, relative positions remain the same, and does it look really cheap? Then you will make some money. But we also don't put all or none. Our game is all kinds because you don't know.
Okay. Samir, how does one bet on this entire digital theme, which will only increase in coming days, whether it's use of digital technology, dependent on data, the fact that the world will now be maintaining social distancing? What gains from this new normal according to you?
So, first of all, in India, there are very few. Now, actually, the Reliance deal with Facebook is a really amazing deal. I think to be done at this time itself is amazing. And B, it is a good signal to the rest of the world that, don't write off India and that India is a big beneficiary of this trend and stuff like that. It's like, previously when any high profile company comes to India, I think it really influences other slightly lower profile companies who are not so actively engaged or who want some proof of the pudding that yes, it is true. So I think it's a very mega deal. But in general, some of these things you have to buy outside India, and now Indians can buy abroad. They should buy. They should put some 5%, X%, 2%, whatever money in funds that are investing outside India. Why be restricted?
Okay. So Samir, closing questions. What's been your biggest experience of working at home? How are you dealing with this? What are you reading? How are you keeping yourself busy, occupied, and yet adding to productivity?
I don't like it, because I live in Singapore where my office is very close. The office is as nice as the house. So I don't feel, I would love to go to my office and so would all our guys. In India, I can imagine that if the traveling time is saved, it's a massive change in productivity. But I still believe that it is this work from home is not going to work. Because I think still people today take it as a experiment, as a 20, 30-day thing. And the companies may be, imagining and dreaming that how much cost they will save, but what cost they will save? They will save one real estate cost. And if they feel that this problem is bad, then they will anyway have to buy or rent bigger offices to have some more distance between desks, tables in office. So this work from home, I generally don't like because I like to sit on a table and chair in my daytime. If I sit on a sofa, I feel like sleeping after 20 minutes. So I am okay. But otherwise, because our job is basically to look at Bloomberg and TV and talk to people, whether it's companies or analysts, all that can easily be done in our business up to a point. But myself, I don't like. I want to go to office.
Appreciate your time. Thank you for joining us. Stay safe and certainly hope to see much more of you going forward.
Thank you.